Good afternoon, everyone, and thank you for joining us today in Grant Thornton's budget webinar. Few hours back, the Honorable Finance Minister presented her first budget. Let me introduce our panel. I am Vikas Vasal, National Leader for Tax. Along with me on the panel, we have Jayajit Bhattacharya, who is a digital economist, and we have two eminent tax professionals with rich experience, Riaz Singna, who focuses on the direct taxes, and Suresh Rohira, who focuses on the indirect taxes. If we look at the overall backdrop in which the budget was presented this year, clearly two themes emerge. First, if we look at the Indian scenario, clearly there was a clear mandate given to the government which raised a lot of expectations and hopes from the government, especially when the first policy announcements are being made. Now that's the first set where the expectations are all-time high from individuals as well as businesses about some bold policy measures to be taken. Maybe some rationalization on tax rates as well, and some of the policy announcements to ease the way the business is being done in India on policy, tax and regulatory matters. If we look at the other backdrop, which is the global economy, clearly the scenario is not that positive over there. The global economy has been facing some headwinds for last few quarters. If we look at the trade war between US and China, or if we look at the US-India tariff conflicts, now when we talk about Brexit or the ongoing conflict in the Middle East or the latest Iran tensions, and clearly the slowing down of two large economies, China as well as India, the headwinds are not that great for the global economy. So a lot of expectations on one side, global headwinds on the other side, with economy being in little doldrum or little slightly down the path. I think these was the two backdrops in which the Honorable Finance Minister had a tough challenge to present its budget. So let me start with you, Jayajit. What's your take on the budget from the economic perspective?
See, the two key issues that were to be addressed by the budget is one, there is a credit squeeze that we are undergoing right now, which is why we have dropped to a 5.8% growth rate. To give a little background, we were growing much above 7% till 2016 when demonetization was introduced. 2 quarters later, we bounced back to a 7% plus growth rate till about the last 2 quarters where we again started falling below 7%. And we have reached a stage where we have become not the fastest growing economy in the world, where there was enough tailwind to grow. And the reason essentially was there is a significant credit squeeze that's happening to the extent that one of the large industries, which is automobile, is still having month after month decreasing sales. So there's quick need of a band-aid in terms of credit being unleashed into the market. And that was one of the expectations from the budget. The second was to understand how do we really grow and quickly become a $5 trillion economy, which would then make us the fourth biggest economy in the world. Now, to that extent, the budget has given the signals that it is very, very serious about addressing the issue of making credit available to the market. It has come out with very bold steps to allow credit to come in through NBFCs and by bank recapitalization. So 70,000 crores has been kept for the bank, which means that now some of the banks can start releasing funds into the market, and therefore we can start having the lifeblood of the economy, which is essentially finance, coming back into the economy. The second is in terms of NBFCs, where the government has allowed a credit guarantee to be given for the first 6 months for high quality pooled assets of the NBFCs with a first loss of up to 10%. That surely is going to give some reassurances to banks and other investors to start picking up these assets from NBFCs, which would in turn release money into the economy. Also, the NBFCs have been allowed to do away with the DRR that they had to keep in, which is the debt ratio that they had to maintain every time they would do a public issue. Now that has been done away in this budget, which means that there is more money available to the NBFCs to actually release to the market. And third, the NBFCs have been given a lifeline by being allowed to participate in the trade receivable electronic discount system, which essentially means that all the NBFCs can now participate in the factoring business that's out there, which again helps the NBFCs to stay alive, which then ensures that MSMEs, which is the backbone of the economy, continues to thrive with the money coming in from the NBFCs. So that is a very good and positive signal that the budget is given. The second point was that how do we really reach a $5 trillion economy? If you look at the historic background, for the last couple of decades, we have been growing 1.5 times every decade, which means that since 2013-14, we were about a $1.8 trillion economy. We should have reached $4.5 trillion under business as usual circumstances. How do we achieve $500 million more in the next 5 years? And there has been very, very innovative steps that have been laid out in the budget. And I think one of the most interesting steps that have been laid out is an investment of $1.5 trillion into infrastructure over the next 5 years. Now, 1.5 trillion itself means that if we add up to the current economy of 2.8 trillion, it is roughly 4.5 trillion coming any which ways because of the addition of this 1.5 trillion being invested into infrastructure. The point is, how do we get this money in? Where do we get the money from, and in what form do we make those investments? I think the budget has given those directions in terms of how that money will be invested, what kind of infrastructure will be put in, and how do we really reach out to that $5 trillion magical figure that we are all looking for in the next 5 years. Vikas?
So Jayjit, looks like 5 trillion will be a reality. Now it's a question whether it is 2034 or 2024 or later on. So while we'll come back to you in terms of the various other macroeconomic announcements which have been made, I think let's delve into the tax rates. Riaz, I think there was a lot of talk about further rationalization of tax rates coming up. There was also a fear that probably inheritance tax or estate duty may see a comeback in some shape or form. There was a lot of talk before that in the professional circles about that. So what's your take on the tax rates, whether much has been done, especially the steep hike that we see on the highest slab tax rate, which is now I think one of the highest in the world probably. So what's your take on that?
Yes, you're right, because before the budget there was a lot of talk. Some people expected a reduction in tax rates while others expected some increases. What has actually happened is both have come true. So firstly, on the corporate tax side, about 5 years ago, the government had laid out a roadmap which spoke about reducing corporate tax rates to 25%. While we have not been able to reach that 25% level for all companies, it has taken a stage-wise approach, and we have been allowing a 25% tax rate for some companies. So up to now, there were companies which had a turnover of 250 crores and below, which were entitled to a 25% tax rate. This year, the finance minister has just gone one step further, has raised that threshold from 250 crores to 400 crores. So we have some relief, but a lot really needs to be done, because the balance, the large companies that we are talking about above 400 crores are the ones which are actually contributing to the substantial corporate tax collection for the economy. The second one is a little more controversial. It is the tax on the super rich, as the finance minister calls it. Surcharge has been increased, and substantially increased. It has been increased to 25% for incomes between 2 crores and 5 crores, and 37% for income over 5 crores. Now this really has a severe impact, and now you have an effective tax rate which can go up to 41.7%. So you're right, we are already one of the most heavily taxed jurisdictions, and this just makes it that much more difficult. Well, the finance minister had her constraints. She needed to have a collections to focus on all the outlays that she has earmarked. But I sincerely hope that this extremely high rate doesn't encourage the so-called super rich to find out various methods or structures to evade taxes.
I think, Jayjit, when we talk about $5 trillion economy over the next 5 years or so, it requires investment of $1.5 trillion in infrastructure, and similarly multi-billion dollar investments are required for various large projects which the government wants to carry out, whether it is in terms of housing for the poor, the large pension schemes. There was a new announcement this year, in this year's budget as well, combined with the earlier announcements. Do you think there is money available first, and second, whether that money will see its play in India, keeping with the fact that global economy is seeing headwinds, and probably there are certain equally good opportunities available in US and other markets today. So what's your take? Is the money available, and will it come to India?
So I think let's address the first question, is the money available? Now the global economy per se is about $71-72 trillion, which means that a 1.5 trillion, we're really asking for about 2% of the global economy. Is it available? The answer depends on what is it that we're offering. We are offering an extremely attractive economy. We are the fastest growing economy in the world. If there's any other place where there is a rule-based economy in place which is this fast growing, it's only India. And so any expression of investment globally, India will be an extremely attractive destination. If you go by the track record, we have been averaging about $56-57 billion year on year for the last couple of years in terms of FDI. So can we reach from about 59, 60 to 300 billions a year? It's feasible, because we're not just saying it's FDI, it's all kinds of investment, which includes portfolio investment. It also includes remittances. We had another $60 billion of remittances coming in. So we are actually sitting on $120 billion of money coming in from outside from just FDI and remittances. So in addition to that, if you can start attracting larger portion of the sovereign funds, a larger portion of the multi-billion dollar pension funds that are available globally, I think it is quite possible to get the target money of 300 billion. The added advantage is that in the last 5 years, the government has honed its skills in being able to go out and attract this money. The government has been able to go out to the Japanese funds, the Canadian pension funds, the Middle Eastern sovereign funds, and we have tasted significant amount of success. On top of it, what the budget really reveals is a whole slew of very innovative mechanisms that have been put into place. One of them actually being a global investor fund round in India, which will be anchored by NIIF. And NIIF itself is a very innovative structure that has been created. On top of it, there's a credit guarantee corporation that's being put together, which is going to help get funds from outside into India. We have also taken the first tentative steps into asset recycling, what has been told as TOT, which is toll, operate, and hand over. And we have had success by selling one of these assets to the Macquarie Bank of Australia at a significant premium. Now, if we can continue on those aspects where we are able to do asset recycling, we're able to do a strategic sale of the public sector units, and we're able to attract the large funds from the sovereign funds and the pension funds through the mechanisms that have been laid out in the budget, I think it's eminently possible to get that money into India. And so it's not a pipe dream. However, having said that, it will not be a walkover. There are a significant amount of challenges that are involved. There are other economies which will be crying for that money, which will be targeting the same amount of money. And we still need to do a significant amount of cleaning up in terms of regulatory hygiene that we require in this country.
I think, Jayjit, if this money actually flows in, and large part of it should go to infrastructure and large mega projects, I think it will automatically trigger the employment generation, which in turn will result into income generation, savings, consumption, investment. I think the virtuous cycle was the word which the economic survey used this time. I think that is what we are talking about.
I think absolutely right. It's the infrastructure which has got the highest multiplier effect. So if the money goes into infrastructure, then you will have the huge amount of multiplier effect coming in, and therefore the virtuous cycle that you referred to, Vikas, starts getting triggered.
Perfect. We are all hopeful and eagerly waiting for the virtuous cycle to actually start in the country today. Riaz, if we look at the last 5 years budgets, clearly one theme has been there in terms of taking concrete, effective and bold measures to address tax avoidance and tax evasion. I think there are a couple of announcements in the budget proposal this time as well. What's your take on that?
No, you're absolutely right. I think the government has shown a clear resolve to try and minimize tax evasion, and this budget is no different. Quite a few steps have been taken. The first one that comes to mind is the TDS of 2%, which has been introduced on cash withdrawals over rupees 1 crore from a single bank. So any bank, any withdrawal is going to be now subjected to a 2% TDS, and that is going to discourage excess use of cash transactions. So that's a very welcome step. The second one is overseas gifts. So gifts made by Indian residents outside India, these are now subject to tax in India under Section 56 as income from other sources. This is again a step in the right direction. I think overseas gifts were being used as a tool for maybe laundering, maybe a very harsh word, but to something to that effect, and I think this is going to control that substantially. So one thing you should also keep in mind that one expects that there will be treaty exemptions which will come in, but these treaty exemptions may not be available in most jurisdictions. Of course, tax credits will be available, so this will have quite a significant impact on overseas gifts. The third one is data management. So now the government will source data from banks, from state institutions, from mutual funds, and collate it as a pre-filled return form and provide it to the assessee. This will ensure that at least there will be greater sanctity of data and will avoid wrong reporting of income to a large extent. Again, I think a welcome step. One more introduction has been the buyback of shares. So buyback of shares for non-listed companies have been subject to a tax, a buyback tax. This has been extended to listed companies under the present budget. What it means is that listed companies had an option of trying to buy back shares instead of declaring dividends, which helped them save dividend distribution tax. I think with a 20% levy which has come in by virtue of a buyback tax, that option has again been removed. And finally, I think to increase the tax base, so there is a provision introduced for mandatory filing of tax returns wherever there are substantial significant financial transactions or deposit in the current account exceeding 1 crore. This is actually similar to a step which had been introduced a few years ago. It was called a 1/7 scheme. This is another step again in the same direction to make sure that we increase the tax base. I think so. There are substantial tax evasion measures introduced.
So Riaz, staying on this point, do you think that once the databases which are there, whether it in terms of GST, direct taxes, or foreign travel, because there is something in the fine print also which tells us that a foreign travel exceeding a certain amount, you may have to file your tax returns. If all these databases actually get linked, then with a click of a button, the revenue authorities or the intelligence authorities will have all the information. Will that be the beginning of the big change that India is looking forward to?
No, absolutely. I think one of the challenges that we've been facing over the years is that there is no control over the income which is actually declared, and I think slowly the parallel economy is getting tougher and tougher. So you have, as you rightly said, GST, which will make sure that there's a larger number of transactions which go through the official system. Now you have got the sanctity of data which is coming in through all the sources, and as you see that these are also backed up by various other measures that the government has taken to increase the number of bank accounts, to introduce the low cost payment wallet systems. So all this ensures that more and more transactions are routed through the banking system, and that definitely is going to make sure that the parallel economy or the evasion of tax will be substantially reduced.
I think economic survey also highlights on this aspect, and there is a lot of talk in the economic survey also on this aspect, that till now the government has been incentivizing the digital payments. However, go forward, probably the intent is to curb the cash payments or make the economy less cash economy. I think time will tell how things progress on this. Since we are on the direct taxes, I think the stated intent of the current government as well as the previous governments has been that we would not offer any profit linked incentives. Okay, and I think that theme more or less continues. But there was an expectation on special economic zones or some new economic zones in order to give a fillip to the production and certain other units. I think there is some announcements over there, but fine print is missing. What's your view on that, Riaz?
So true, I think the government has made the roadmap quite clear in the past that they are going to do away with incentives over a period of time, and I think they are progressing in that right direction. But that does not stop specific focused incentives for areas and industries that one needs to promote. And again, this year there have been a couple of such provisions which have been introduced. The first one I would say would be a measure to promote affordable housing, and with that in mind, any loan taken for acquiring a house which costs 45 lakhs or less, it would fall under affordable housing, and an additional interest write-off of 1.5 lakhs per year is going to be allowed. And this I think is going to encourage more and more affordable housing, and the government's resolve to try and create housing for all. So that's one. The second one is in terms of promoting electric vehicles and also promoting certain technologies which go into the making or the promotion of electric vehicles. So any purchaser of electric vehicles will get a deduction of I think 1.5 lakhs from his total income. That's on one side. Another interesting thing was that the finance minister mentioned that there would be an additional incentive offered to companies and businesses engaged in the manufacture of electric vehicles, then lithium batteries, electric charging stations, etc. And those incentives were under section 35 AD, which was to be introduced. But when one goes to the finance bill, one doesn't see any reference to that section. So I guess there will be some correction that we can expect.
Do you think there was an opportunity, Riaz, to extend some of the sunset clauses which we are seeing, whether in terms of the special economic zones? There has been demand on that.
Yes, while there have been demands on that, as I mentioned earlier, the government has made its resolve quite clear that they do not want to encourage the continuance of all these exemptions and incentives. So I guess in keeping with that trend, they have not extended those exemptions.
So Riaz, my favorite question, do we see once all the tax incentives are gone from the direct tax statute and life is relatively easier for both of us, will the corporate India see a 20% tax rate in near future?
One hopes for that, but I think to get to that 20% tax rate, we need to make sure that our hopes of reaching a 5 trillion economy really progresses in the right direction.
Because 25% is not 25%. If you add surcharge and education cess, it's much higher.
Absolutely. In fact, as I mentioned earlier, I think we are one of the highest tax jurisdictions in the world. And under various sections, we also have dual taxation. We have long-term capital gains with
dividend distribution tax.
Dividend distribution tax with dividend income tax. So I think there have been duplications, and we are really a heavily taxed economy. So we need to move towards lowering the tax rates over a period of time.
So let me change tracks now and move to the indirect taxes. Suresh, GST is outside the budget purview right now, but we saw a lot of policy announcements being made and some of the bold positive moves announcements coming from the finance minister this time, and some custom duty changes. So what's your overall take on the budget from the indirect tax perspective?
Sure, Vikas. So you see, firstly, budget is becoming a non-event for indirect taxes. While I say so, every GST council meeting is as good as budget for indirect taxes, because in GST council meetings you see so many announcements which are happening. Having seen the changes which the GST council have done in the last 2 years, I would say the finance minister, she did try to strike the right balance in this budget. So she spoke about customs, she spoke about GST a little bit, she also spoke about dispute resolution. On customs, clearly, the expectation from the industry was there could have been some stimulus packages to boost manufacturing, where we heard her saying about the mega investments in the manufacturing on advanced technology areas. So your products like laptops, lithium batteries, solar photovoltaic cells, and so on and so forth. So industry was expecting a little more in terms of giving that thrust to the manufacturing sector with some stimulus packages. So that was the expectation. But having said so, she did try bringing in some changes in terms of the customs duty rates. So there was an increase in the customs duty rates on precious metal, gold, automobiles, marble slabs, motor spirit, so on and so forth. So there were changes which warranted to encourage the local industry so that there is indigenization. And parallelly, what the finance minister did was also she tried to widen the powers of the authorities. The offenders sitting overseas, to catch hold of them. So the powers to arrest have been widened. Even something like availing drawback or availing exemption, which is by fraudulent means, the powers have been widened for the authorities to catch hold of such offenders. So she did try striking that right balance. However, I would say, with this government again coming into powers, the industry was expecting much more, but I'm sure we would see those changes in the GST Council.
So Suresh, custom duty increase on the gold. I think gold is one element or one metal which I think attracts most of the Indians. Okay, and it's also one of the reasons why our foreign exchange goes for a toss many a times because of the heavy imports that we make. Do you think this will actually help in curbing the consumption in the country, or the consumption will continue in spite of a slight increase in the customs duty over here on gold?
So you see, in terms of the consumption would continue to remain as it is, and there would not be any impact on the consumption. However, the gold prices, the basic customs duty has been increased. So overall, definitely we would see an impact in the industry, and that will definitely percolate down to the industry over a period of time. But having said so, the consumption patterns would continue to remain as they are.
Interesting. Jajit, in terms of the overall import and exports that India sees, we are witnessing there was, I think there has been rise in import in terms of the capital goods and the technology, whereas on the export side, thanks to the situation right now globally, there is a huge opportunity for India to increase its exports. Do you think we as a country are taking right steps and we are moving in the right direction? Because there have been media reports that about 250 US companies want to set up a base in India. Do you think the budget has some policy announcements to help move us in that direction?
I think this whole movement of having a China plus one strategy has been around for a decade and a half, where people and companies globally wanted to de-risk themselves, especially because the labor rates in China was rising and the cost of doing business in China was rising. Unfortunately, the China plus one did not have one as India, but it was one as Vietnam, Bangladesh, and so on and so forth. Even now as we speak, we have not been able to really capitalize on the global trade dynamics that's going on. The budget clearly gives an intention that one would like to capitalize on this opportunity that has opened up, but the details will come in subsequently. As Suresh just mentioned, that budget has lost its significance as the only measure of sending signals out to the market. It is an important event, but it is not the only event. So we're very sure that subsequently we'll hear more from the government, especially because the Ministry of Commerce has set up specialized task forces which will be looking at how to capitalize the opportunity that has opened up, and how do we get more US companies and European companies to set up base in India, and how do we substitute imports of US coming from other nations by imports of goods coming from India to US and to Europe and so on. So it will be a long-term strategy that we would need to see. The more limited point is that this is something we should have worked on the last decade and a half, and I think at least it's time now to really shift gears and to start working towards increasing our exports in this opportunity that we have seen, and the budget does send out the signals that the government is serious about it.
I think, Jayji, there has been talk about the labor reforms, and I think on the land reforms also there is a dire need, because if we want to attract foreign investment or even the private domestic investment, I think these two are the burning issues. Do you see the policy making heading in the right direction on both the things?
Unfortunately, because both of the issues are not a central government issue, it largely falls under the jurisdiction of the state governments, and therefore it becomes that much more complicated. Fortunately, given the political situation that we are in, where there is one single party which is in power in most of the states and is aligned to the central government, hopefully we'll see a faster level of reforms in both labor and in land. Also, we had a situation where the lower house and the upper house were not synchronized in terms of who controls power, and some of these legislations, especially around land acquisition, required the cooperation of both the houses, which is the lower house and the upper house coming together to pass the critical legislations which will bring in the reforms. I think we are in a situation where we can now bring in the reforms that are badly needed in both labor and in land. And as you rightly said, labor, land, and the third leg being capital are the three critical legs of any capitalistic society. And if we get labor and land right, and if we are able to attract the capital that we are talking about, I think nothing should stop us from having not just 8% but 10% plus growth rates. And there's a precedence to it. We did have a 10% plus growth rate. Our neighbor had a 10% plus growth rate over a period of time and not just in 1 year. So it's highly achievable as long as we solve the two issues that you're talking about, Vikas, which is labor and land reforms.
In fact, Jayjit, economic survey clearly points out that, and it speaks very loudly, that one of the reasons probably we remain dwarf units below 100 employees. There could be various other reasons, but one of the key reasons I think is the labor issues.
Yes, in addition, because also the fact that we have given in incentives or disincentives to grow, and we have given incentives to those who have a turnover of less than 100 CR and less number of employees. And so we see that about 24 to 25% of our companies have 99 CR turnover because they do not want to cross that 100 CR threshold. And I think those are perverse policies that are in the way of going out, and there is a signal that it will be reversed as we move forward, especially also in the economic survey that you're mentioning. And I think once that happens, we should be having unfettered growth coming in.
Suresh, when we are talking about the issues, I can't help but talk about the litigation that we face in the country. I think it would not be wrong to say that both the tax authorities and the taxpayers love to litigate in this country, right? Once GST was introduced, there was an expectation that something needs to be done for the past litigation, whether it is excise, central excise, or the state sales taxes and the services taxes as well. Some states did roll out some measures in terms of cutting the erstwhile litigation, but now there is a talk which was there in the budget speech that there will be measures, there will be some announcements to cut down on the past litigation, both on excise as service tax. What's your take on that?
Sure. So, after GST was rolled out, all the companies were definitely worried about the litigation which they were under. And immediately what happened was all the states put their acts together and they rolled out amnesty schemes. And you still keep seeing different states rolling out amnesty schemes to get rid of the earlier litigation under VAT. Having said that, during the interim budget, which Mr. Goyal had presented, there were certain representations to try and curb the litigation under central excise and service tax. So, as the famous saying of Prime Minister, "Sabka Saath, Sabka Vikas," they also said, let's roll out Sabka Vishwas. And that's what is the scheme they rolled out, which is Sabka Vishwas Legacy Dispute Resolution Scheme. And they have very nicely, crafted the scheme. Of course, we would see the specifics in the days to come. They have put slabs for 50 lakhs or less. The relief will be available up to 70%. For more than 50 lakhs, it will be a relief up to 50%, and so on and so forth. So that's a very good move, I would say, to curb all the litigation. The pending litigation has to go away under Central Excise and Service Tax. But with the same breath, I would say the government should also try and keep control on the litigation which is erupting or about to erupt under GST. But it's a very good move, I would say. That's a welcome move from the government.
Since you talked about GST, Suresh, what's the global scenario? Because we saw a lot of countries introducing GST, and in fact, one of our neighbors actually rolled it back as well.
Yeah.
Okay, whereas Middle East is going ahead with GST. So, what's the current global economic view on GST/VAT?
So, I would say the global footprint is every country looking at their revenue collections are wanting to march towards the indirect taxes, which is VAT or GST. If you were to look at the entire GCC countries are marching towards VAT one after the other, and definitely their endeavor is to ensure that they are able to bring the entire GCC encompass under VAT, which is GST. Our neighbors, while they rolled back GST, they have introduced supply and services tax, which is goods and services tax in a different form, and there are certain measures which have been taken which are similar to GST. So I would say, in terms of the revenue collection, that's one good means of source for any country to take care of the expenditure towards many other things like infrastructure and so on and so forth. So every country, I would say, is marching towards indirect taxes.
So, Suresh, I will come back to you on the GST points and whether we can have one or two rates it's only rather than the 4 slab rate. Riaz, one question for you. Is it possible to foresee, still we have some reductions left for individuals, and the peak rates are going up. Is it a trend that we will see increase in tax rates going forward, or the slab rates that we currently have and the tax rates that we have will continue to stay? Because if you look at the effective tax rate at the highest slab now, it will turn out to be 42% plus, which is steep, which we saw about 10-15 years back, and from there we have come down. But this year it was quite a steep increase over there. So is it a new trend that we should look for or warn us, or it is one of the cases where the government did not introduce a state duty as you mentioned, but opted for this route?
So, because that's interesting, but past history has shown us that every time the government has taken steps to increase tax rates, our effective tax collections have actually gone down, and we have been actually struggling with higher levels of evasion, higher levels of non-compliance the moment the tax rates become very, very high. In fact, not that long ago, we used to have a tax rate of 95% on certain high levels of income, and I think that was one area which actually led to a lot of tax evasion at that point of time, and I think we took a long time to recover from it. So hopefully this is not a trend which will continue. I guess that there has been an interim focus, there have been fiscal deficits, we have been the economy has had its challenges, and collection for the government has been a challenge. So I would not expect this trend to continue. Further, given the fact that all major jurisdictions in the world have been actually reducing the tax rates, I would think that this would be temporary and we could expect a reduction in the near future.
So Riaz, one clear thing which I thought was missing in the entire budget speech was any particular announcement on the direct taxes code, because we all knew if some major announcements are not being made in the budget, it's because the direct tax committee is to submit its report towards the end of this month. But I think there was no mention about that. Any thoughts why it was not mentioned, and what we could see as a completely new tax code in near future?
Yes, in fact we did expect that the finance minister would at least lay down and announce the path that she intends to follow in terms of implementation of the DTC. I guess that given the fine balance of sentiment versus reality, she has decided to keep the changes to a minimum in terms of announcements. The good changes have been announced. In terms of increase in tax rates, she has tried to restrict it to a couple of large provisions, but though they have a huge impact. And I guess that since the DTC rollout plan has already been communicated, no special announcement came in this budget, but yes, it was surprising.
Interesting. So Jayjit, yesterday in the economic survey and today in the finance minister's speech, one clear theme was on the MSMEs and the startups. I think it's heartening to note that the government is recognizing that MSMEs in India are the backbone for the Indian economy, and startups are the future, where we will see new technologies coming in, new unicorns coming in, and wealth being built up. Now, in terms of the MSMEs as well as the startups, I think it is not only required from wealth creation, but it is also required from job creation. I think there has been enough economic and research studies which have said that India cannot blindly follow the US model itself. It has to be a mix of US as well as the German model, wherein you have a lot of small and medium scale enterprises. I think a mix of that will be an Indian model. Add to the Indian spice on that, I think that will be a complete curry, Indian curry that we'll have. What's your take on the MSMEs and startup? Has enough been done in this year's budget?
I think absolutely yes. I think the need and the focus that has been brought in this budget for MSMEs and for startups has been quite significant. Let me just put down the significance of startups and just paraphrasing what you said, because is that if we just add the valuation of Apple, Google and Tencent from China, their total valuation is more than the GDP of India. And that's the significance of startups. Startups are the future. It took Google to be to what Google is in about 20 years. They became what they are right now. And so if we start creating the right kind of ecosystem for startups to grow and become really, really large, I think that's going to lead to the jobs and the economic growth and the $5 trillion target that we're all looking at. And therefore, to that extent, we had certain issues with the regulatory ecosystem that the startups were living in. They had one of the significant asks was to remove the angel tax. I think this budget looks at that. This budget gives relief to the startups on the angel tax. We still have to see the details of what it really means, because it was a very nuanced wording that the finance minister came out with. But it appears that she's addressing the big pain issue of angel tax, which was essentially, in a way, what Riaz was saying, tax on tax, because angels were bringing in tax-paid money and then they were being taxed again. And there will be no more scrutiny on the valuation under certain circumstances. And so the overheads, the regulatory overheads that startups are facing, that's going to go away. On top of it, the startups accumulate a large amount of losses before they start making money. And this current budget and the finance minister's speech indicates that there will be a relief in terms of being able to roll over the losses of the startups to be able to take it out from the expenses of the next year and to get the tax benefits of it from the year that they start making profits. I think those are significant signals to the startups and significant relief to the startups. Similarly, MSMEs, which are the backbone of the country and which did take a hit in around 2017 because of the demonetization policy, they needed support, and on top of it, what we're having now is a credit squeeze which is going to impact the NBFC, the MSMEs. To address the credit squeeze, there have been several SOPs being given to NBFCs. I think that's going to help the MSMEs. Also, a very significant step being taken is to provide MSMEs a 1 CR loan within 59 minutes. There have been pilots that have been done on that. The pilots have been quite successful. So a large-scale rollout of that scheme is going to significantly help the MSMEs. In addition, there has been a budget of 350 crores kept aside to provide a 2% subvention to loans taken by MSMEs. I think that's very, very positive, and that's a very positive step coming from the budget. also in the background of the fact that the government has already been supporting MSMEs by being able to provide a very strict regulatory environment for large companies to ensure that they pay up whatever is due to the MSMEs. In addition, the government has put a similar kind of scheme on themselves because the government is a large provider of orders to MSMEs, and MSMEs is one of the significant vendors to the government. And so the government has come out with a platform where MSMEs can put their receivables from the government and trace them and track them, and the government can have a laser focus on the payments to be made to the MSMEs so that they do not suffer. And this across all departments, all governments. I think that is going to significantly ameliorate the credit situation and the fund flow situation of the MSMEs, and therefore it's going to bring them back into stream, helping them to get more employment and more jobs in place.
So I think,
sorry, I would just like to add that while we've had all these specific provisions which have been brought around in tax, I think the finance minister has been making a few references in the speech which are encouraging inflow of investments,
yes,
creating a greater ease of doing business. So you have FDI norms being opened up, you've got certain more sectors coming in for FDI. You also had an announcement that all the different labor laws are going to come under one single code, and I think these things are also going to help in a large way to bring in investments and overall help the economy, and startups could also have some more investment opportunities through foreign direct investment.
Riaz, you talked about the FDI in the financial services. I think the stock markets are down today post the budget. So maybe it's the reverse. If you have a good pragmatic budget, sometimes it takes little time to go through the fine print, and we will see what happens in the stock market tomorrow. Jajit, in the economic survey, there's a lot of talk about the behavioral economics and nudge factor. From your experience in the global economy, I think some of the countries like Singapore, Australia have used these kind of schemes in the past. How much important does it place in the Indian economy? I do understand in the past also there have been many government slogans, and there have been some behavioral change which the government has been able to implement not only in the last 5 years but over the last 40-50 years. How much do you think behavioral economics will play its part in terms of helping us gear towards 5 trillion and later 10 trillion economy?
You know, combining your question and what Riaz was talking about in terms of the tax on the super rich, I think it might just nudge them into going to countries such as Singapore that you mentioned. I hope that doesn't happen, but yes, nudge economies does play a role. It can work any which way. It can disincentivize people to be part of their formal economy, or it can incentivize more people to becoming more productive and to come back to the formal economy. In fact, my take always has been, Vikas, that we already are a $5 trillion economy because by any measure, 50% of our economy is black, at least, which means that if we are a roughly $3 trillion economy, we are already $4.5 trillion if we combine the formal economy and the informal economy. Now the challenge is how do we squeeze out the informal economy and make it more and more formal, which is where the nudge part starts becoming extremely important. And I think all the nudges that have happened, the demonetization, the lower tax rates, the GST, all of this has helped in bringing more of the informal economy into the formal economy, which then helps in increasing the taxation, which then helps in doing everything that we're talking about in the budget. So clearly nudge economics does have a role to play. We have to be very careful how we use this tool. It's a very, very powerful tool. If used the wrong way, it may nudge people to behave in a mechanism that we don't want them to behave in. But if it's used in a positive manner, then we'll see a rapid march towards the $5 trillion mark that we're looking at.
So there's talk about incentivizing the honest taxpayers. I think large part of us will benefit out of that. And since you talk about bringing the informal economy into the formal economy, I think one clear measure that has been taken by the government is the GST. Suresh, we heard about GST, but we didn't heard about e-way bills. So what is the roadmap for GST right now?
So because the finance minister, while she spoke little on GST, but let me tell you for the knowledge of viewers, in the fine print there are certain important things which have come. So for example, there has been a change in the provision on interest. Interest is leviable on the net value after adjusting the input tax credit. which is a very good change. Secondly, there is an introduction of provision for transfer of amount from one head to another in cash ledger under GST. So, which is again a welcome move. In earlier days, people used to find it difficult if they have deposited tax under the wrong head. As far as e-way bills are concerned, let me throw some light that in the last 2 years, as you know, GST had GSTR 1, 2, 3, and eventually it landed up only in GSTR 1 and 3B. After so many representations coming across industry, finally the government underwent a change in the GSTR return, and the new return has already been put on trial. So the finance minister, she made a mention about country embarking on this new return and also the tax invoicing system from Jan 20. And the thought process there is to gradually phase out these old returns and get into the new returns along with the e-invoicing. Now that's where she mentioned about the e-way bill going away. There will be no e-way bill, because if there is e-invoicing which gets introduced and it kicks in, I would say in the right fashion, and if the entire country were to gradually embark on this e-invoicing, then the e-way bill is not required, because today e-way bill is one of the document to control or to track the transportation of goods or the movement of goods. So the e-invoicing would replace that part of e-way bill. So overall I would say that gradually, step by step, we are seeing GST progressing, and they are wanting to try and track each and every transaction. With e-invoicing, certainly it will happen to a greater extent, even from an MSME standpoint. But yeah, directionally, I would say in GST, the industry was waiting to hear some direction on inclusion of petroleum products under GST, or in terms of change in the slabs. But I'm sure that's there, on their cards, in the back of their minds, which will happen in the days to come.
So 2 slab rates that we have been hearing, do you think it could be a reality in near future, or it's still far-fetched as of now?
Well, certainly I would say it would definitely be a reality, because the government knows for a fact, if you were to see the slabs today, which is 5, 12, 18 and 28, what they are wanting to do is pull down the 18 ones to 15 and pull up the 12 ones to 15. So we would definitely see, so may not be 2 slabs, I would say there could probably be 3 slabs, considering the economy and the classic example of Hawaii Chappal and Mercedes, which continues in the recent news as well. So there could be 3 slabs, but with that I would say an economical thrust can definitely come if they were to look at the petroleum sector to be brought under GST net. And of course that would require a lot of back end working in terms of how they would introduce it.
I think petroleum for the automobiles, and how about the fuel for the human consumption, which is alcohol?
So that's definitely going to come, because as we spoke during the last interim budget, that coincidentally it's again over a weekend, and the government's endeavor is to gradually bring all the spirits under their net.
Yeah, we are all getting into the Friday evening spirits now.
Yeah, absolutely.
In fact, if we look at it, there is an encouraging trend, not only on GST but on direct taxes as well, Riaz. The collections are going up. The number of taxpayers is going up. Of course, there is a debate how many taxpayers who are filing the tax returns are actually paying taxes or merely filing the tax returns. But I think double-digit increase in tax collections on direct taxes is a good sign. What we are missing right now is in terms of adequate alternate dispute resolution measures. I think that point is little missing in the budget in terms of further enhancing or strengthening the authority for advanced rulings and other alternate measures in order to cut down on the litigation, even though the intent is there.
Absolutely. In fact, unfortunately, while as you rightly put down, the intent is there, and with that intent various forums have been created for dealing with disputes. In practice, we have had large delays even with decisions on the advanced ruling authorities because of lack of adequate benches, and there's an accumulation of various cases. So while the mechanisms are in place, what we need to do is improve upon the actual implementation, make sure that there are adequate forums which are functioning regularly, and also ensure that there is a certain accountability on decisions being given within a reasonable period of time that will encourage people to use these sort of forums instead of going into the long protracted litigation. In fact, as we've seen in the past, it's not really the tax cost that bothers people as much as uncertainty does. And things like the advanced rulings would and the advanced pricing mechanism, the APAs, these could really go a long way, and I think we need to focus more on these alternate dispute panels.
So Jajit, while we focus on the tax mayas, and clearly the theme of the budget has been deepening and widening the tax base, making India a less cash economy, making sure that there is minimal interaction. In fact, there is an interesting provision announcement which was made by the finance minister that there will be literally no or minimal interaction between a taxpayer and the tax collector when the revenue audit is going on. Probably, I think to my mind, India is one of the very few countries which will be introducing this provision. All these measures are moving in the right direction. India does and will become a 5 trillion economy. But I think unless the fruits of labor are distributed to the common masses, okay, I think we will not achieve what we want to achieve as a nation, because then you will have wealth creation happening for a section of the population, but not the fruits of that benefit will not go down deep. Do you think enough mayas are there or in the roadmap right now which will ensure that the poorest of the poor will get uplifted besides the pension schemes that the government has rolled out?
Right, no, absolutely, because when an economy is growing at the rate of 8%, 9%, it's very easy to leave behind a whole bunch of people who will not get the fruits of the growth that we're talking about. To take an example, if I set up a very large retail store, I'll end up killing the mom and pop stores, the kirana stores nearby. And I can't expect a 55-year-old kirana store owner to then become a checkout clerk in a large mall. That does not happen. And therefore, we need to have mechanisms to make sure that the old farmers, the old mom and pop shop runners, the retailers, and so on and so forth are taken care of as we march towards this larger goal of being a $5 trillion economy. I think year after year, we have been seeing that the government is bringing in a social security net, which is becoming stronger and stronger every day. We have seen pensions for farmers coming in. In this budget, we saw pensions for retailers coming in, and we have observed how a health safety net has been thrown out in terms of the Ayushman Bharat. Similarly, other safety nets in terms of education, in terms of insurance, in terms of accident-related insurance, all of those are being rolled out. The other aspect that we also need to see is skill insurance in one way or the other, which I basically refer to is young people getting irrelevant in terms of skills, and how do we have a rapid reskilling network. We didn't see any reference to that in this budget. We did see reference to it in all the previous budgets. But I hope as we move forward in subsequent announcements, the government will come back and talk about how they will put up a robust security net for skill becoming obsolete for specific people. But overall, as we see, there is a very strong push towards a social security net being rolled out to all the vulnerable sections of the society, and that's extremely important as we accelerate towards a $5 trillion economy.
So I think overall there is a lot of thrust on cleanliness, education, healthcare, bringing the poorest of the poor, uplifting the poorest of the poor, rationalizing the tax rates. Okay, of course there are positives and not so positive this time in the budget, making it more efficient in terms of administrative mechanism and compliances, both on direct taxes and indirect taxes. I think at least the direction is right now.
Absolutely.
So I think in our view, it's a pragmatic approach which the government has adopted in this year's budget. A good roadmap has been laid out for the next 5 years in order to make India a 5 trillion economy. I think the challenge will be in terms of actually implementing these large scale schemes to attract foreign investment as the panel mentioned, that there will be increasing competition for capital, and capital will go where it is respected. So we have to make sure that all the hurdles that the capital faces in India are removed. And I think there are adequate measures being taken, but more needs to be done. So overall, a very pragmatic budget, move in the right direction, and let's hope that we work together with the government to make India a 5 trillion economy and transform itself, and that will benefit all of us. Thank you very much for joining us today, and wish you a great Friday evening. Thank you.
Thank you.
Thank you.